Hello investors, today I'll speak about 3 dividend stock, a great 3 dividend stock to buy right now, and of course to receive a stable passive income and stable cash flow. And let's start with the first company for today. It's McDonald Corp. Of course, we have a dividend yield here more than 2%. Let's have a look on its chart. So here last 3 years we are trading in increasing channel. Here in my mind the potential, we still have a nice potential to grow, and the potential to grow here is around about 10%. Let's have a look on its fundamental parameter of this company. So the market cap is more than 200 billion bucks, dividend yield 2.1%, and the amount of employees 150,000. So of course, this company engages in the operation and franchising restaurants. It operates through the following segments: international operated market, international development, licensed market, and corporate. The US segment focuses its operation in US. Let's have a look on its valuation. So we see the PE ratio now is 34. It's a little bit elevated from its average value, but PS ratio about 9, so it looks little bit expensive. But what we see here, very stable revenue, very stable cash flow, and please pay attention that the net profit margin is very low. It's about 27%. The gross profit margin it's 56%, so very high marginal business. If we look at the breakdown, so more than 60% the company earned from franchise restaurants, and the company operations give the company about 37% of its revenue. If we look at the international market, so international market is about half from its revenue, and the US give about 40% to the company's revenue. So here McDonald, we see that the dividend increase track record is 46 years. So we have a dividend aristocrat here. Dividend yield is 2.1%, and of course the annualized 3-year dividend growth is more than 6%. Of course, it's very nice when your dividend payment continue to increase last more than 40 years. The payout ratio is about 70%, so it's also quite a comfortable payout ratio. Let's move to the next stock for today. It's Coca-Cola, with a dividend yield about around 3%. If you look at the chart, so here last 15 years we traded in increasing channel, and of course I'm expecting another move to the higher border of this channel. So in this case the growth potential is about also about 10%, the upside here. Let's have a look on the fundamental parameters of Coca-Cola. So market cap about 300 billion bucks. The company is founded more than 100 years ago, and the evaluation, the P ratio, price per earning now is about 30, and PS 6. Actually, the PS ratio is very close to its median value, so nothing special. Here the marginal also, it's very highly marginal company. The net income, by the way, the net income increased. We saw it was at 2018 6 billion bucks, and for the last year it's more than 9 billion bucks. So the marginality increased from 18% to 22%, and also the revenue of this company also continued to grow. So it's of course very positive and very good sign that the management continue to do the very good and stable things in the company management. If we look at the revenue breakdown, the concentrate the company pays this segment give 44%, and finished products as 55% of its revenue. And by the countries, we see US of course 30% of the all revenue, and we also have 25% in the global markets. Let's have a look at the dividend history of Coca-Cola company. We see current dividend yield about 3%. The dividend increase track record is 62%. So in front of us a poor dividend king. This company increase. I remind you, this dividend king is a company which increases dividend payments more than 50%, and the annualized 3-year dividend growth is more than 3% for such company like Coca-Cola. It's also like I think it's very nice and very positive dynamic. And also we look at the amount of debt at the free cash flow of this company. So the company a little bit decreased its amount of debt. 2018 the debt amount more than 44 billion bucks. Now it's about 40 billion bucks. And also the amount free cash flow, it was 6 billion bucks. Now it's very close to 10 billion bucks. I reminded free cash flow, it's the amount of operational cash flow. The cash flow from operating activities minus the investment, the company that investing in capital, in equipments, in machinery, in capital investment. Of course, it's a good sign that the company has more free cash flow, and at the end of the day, this money and this cash can distributed as a dividend payment to its shareholders. Also, let's have a look on the projections. Earning per share. It's expected to grow for the last 4 years. And the last company for today, it's AT&T with a ticker T. So now it's traded at around 20 bucks per share. So let's have a look on the chart. Here, what I see here, I think it was we have a impulse 5 ways move. So the first way, the second, the third, the fourth, and the fifth. So most probably here we are very close to the finishing of the fourth way, the correctional one. It was ABC move, another ABC, and the final NBC. Here, by the way, 15 bucks. It was a major support level since 2002. For the last 20 years, it's a very strong and major support level here, 15 bucks. So I'm expecting to see another move up. I'm hope we may see a fifth way. In this case, it will be higher than 44 bucks. So in this case, the growth potential here is more than 100%. Anyway, let's have a look on its fundamental parameters. One second. So we have here very high dividend yield. It's about 5.5%. Of course, the AT&T, it's a company which engaged in the provision of telecommunications, media and technology services. It operates throughout the communications and the Latin America segments. The PS ratio, price per revenue, very low. Here is about 1, so it's very cheap. Most of its revenue, 96% company earn in US. Also you have Mexico and Europe here, but it's very small shares. Here, by the way, we had a dividend cut, but look, the company decreasing its amount of debt very aggressively. Now we are in an environment of elevated interest rates, so of course it's a very good sign. Let's have a look on the quarterly expectation for EPS, earning per share. So it's the next 4 quarters expected to be very stable, and also the revenue here, it will be also very stable. So it was my view for today. 3 dividend stocks, McDonald's, Coca-Cola, AT&T. The last one, AT&T, now I hold in my portfolio, and I continue to receive a dividend payment more than 5%. Now we are in tough year for the stock markets. The interest rates are very high, so this year I prefer to just receive a stable cash flow, and of course the dividend payments from different companies. So if you like this video, don't forget to press the like button, subscribe to my channel, and see you on the next time. Bye.